Okay, 2024 is behind us. We are in 2025, and you guys have been asking me, Tony, what are you guys focusing on with your 258 unit portfolio in 2025? So that's what this video is about. I'm gonna show you the key things we are focusing on, because as you know, or maybe you don't know, maybe you're new here, our goal is to grow to 1,000 units as a husband and wife team. And we document our journey to help you in yours, whether you're trying to buy your first rental property, whether you're trying to go from 1 to 10 units or 10 to 100 units. I share my journey, I share my mistakes, I share my lessons in order to help you guys. And I have a couple key points here, and some things that have cost me a lot of money, things that have made me a lot of money. So make sure you stay with me to the very, very end, because they all tie together. And if you just get one piece, but you don't get the other ones, it doesn't add up. Okay, real quick, I want to address this, and you can skip this part if you want to just get to the meat and potatoes of it. But, because we're building a community here, guys, and I also want to teach you lessons. I want to teach you like life stuff too, and I want to teach you the mindset to be successful. You know, on some of my reels and some of my TikToks have been taking off, people will leave comments, not people like you and I who are part of the community that we've built here, but outsiders looking in, they're like, well, if you own all that real estate, why do you need to post on social media? Why do you need to make a YouTube or Instagram video? Guys, we don't need to, we get to. That's the mindset of success. I started with nothing. I started with credit card debt. I grew up on food stamps, right? I started with nothing. I would find successful people on YouTube, there was no Instagram back then, and I would watch them and I would study them. So as I've become more successful, real estate investing, being an entrepreneur, was very difficult, was very hard, was a lot of sacrifices. Like I said, I started with credit card debt to get started, but it's given me an amazing life. Like it's January, I'm literally here in Newport Beach, brought my wife, brought my puppies, and we're running our businesses here because it's cold in Michigan and I don't want to be there. And that's thanks to making smart moves in business, being an entrepreneur, and investing into real estate. So I feel compelled to share what I've learned to help you wherever you're at. So that's the goal, guys. Remember, it's not that we have to, it's that we get to. Being an entrepreneur, being a real estate investor can be hard sometimes, but I want you to take that mindset shift that I get to do this. I get to own this real estate. I get to run this business. I get to have these customers, these clients. That's the mindset shift, okay? So we get to, it's not that we have to. Now let's get into the video. Was that helpful? Do you resonate with that? If so, let me know, comment below, because I want to surround myself with like-minded people, and that's why I think you're here too. So, okay, number one thing I'm focusing on is renewals and retention, not just growing the gross income, okay? Now, what do I mean by that? This is a big mistake I've made, so you can profit from this. Let's say you have a tenant at $1,500, right? And you know market rent is $2,000. And that tenant moves out because you're like, hey, I need to get to $2,000, which is something I've done in the past, right? Well, I'm just gonna improve the unit and I'll get the more rent and I'll make more money. Write this down, remember this. Revenue feeds the ego, profit feeds the family, okay? That tenant moves out. Let's say you can fill it in 2 months, right? 2 months. You have to turn the unit, upgrade the unit, however much that costs. Could be a few hundred, a few thousands of dollars. You're losing 2 months of income. You will never get that money back. You have to market it. You have to pay for marketing. Maybe if you've got a duplex, you can just put on Facebook Marketplace, but owning a 56 unit, a 42 unit, 100 unit apartment, you got to pay to market those puppies, right? Because you're competing with so many more people. You have to pay commission for someone to go fill that. So, and I've done the math, I've looked at it. We lose money when people move out. Even if we only increase them $25, we still make more money keeping them. So keep the heads in the beds. We're focusing on renewal. We're focusing on retention. We're focusing on maximum occupancy. And I'm okay if it takes a little bit longer to get to market rent, because we are profiting more. Remember, at the end of the day, it's about profit, not about revenue. So that's number one. Number two, we are focusing on growing our in-house management company and doing all the work in-house versus outsourcing. So like, what do I mean by that? You guys know on this channel, I push you guys to manage. I push you to operate your money. I've lost money. I almost had to give up real estate investing when we use third-party management, because they bleed you dry and it's not their money. So they're not going to protect the money the way you would, because it's your money. But now that we've grown and we have 3 full-time property managers and a full-time maintenance person, we are looking to continue to expand that. We're looking to bring on a full-time painter, right? Which is like crazy. When I started investing in real estate, I was like, never thought about a painter. But we are now, because what did I say? It's about profit. It's not about maxing revenue, right? It's about profit, take home money. when we were growing and my wife was looking at the numbers, she's like, wow, we pay a lot for third-party contractors for painting. We pay a lot on third-party contractors to do things above and beyond the routine maintenance. So if we can bring all those things in-house, yes, we have our payroll increases, so like the amount of salaries we're paying increases, but at the end of the day, we save so much money. And when you save money, what's that do? That increases your NOI, your net operating income, which makes the property more valuable. We're saving so much more money by doing it in-house. So we are looking to bring in as many things as possible in-house. When I bought the 56 unit from the two brothers who owned it since 1993, when I was 3 years old, comment below, how old were you in 1993? They did everything themselves. They made the freaking blinds themselves. I'm like, what are these goofballs doing making blinds? Now I understand. Now I understand they wanted to do everything in-house. So I can't make blinds because that's not my job, right? And I don't know how to do that. So we're gonna hire more jobs, more roles inside of our management company to do things more in-house, which saves us more money, which boosts our NOI, which boosts our profit. Okay, so if you're starting off and you're like, but I can't hire someone full-time, but if you can do those things, that's a huge value add. Okay, number 3, we are scaling and selling to grow. We are scaling and selling to grow. So we will be selling my 7 units to my 16 units. I own a 7, a couple 8s, a 12, a 16 unit. Yeah, 3 8 units and a 16 unit. This is a hard decision to make. I've talked about this on Instagram and social media as well. It's time to grow. And it is much more, there's a difference between units and management units. I didn't understand this in the beginning, right? So I have an 8 unit here, I have a 12 unit here, I have 2 8 units here, I have another 8 unit here, I have a 16 unit here, I have a 17 unit or a 7 unit here. When you manage in-house, it's very not profitable to do that because my property manager, she needs to go and do showings in all these. So she's driving all around. So she loses time. A maintenance person has to drive all around, right? We've got 7 tenants here, 8 tenants here, 16 tenants here. So it's time to sell and grow. And the metric I use to evaluate that is I look at the monthly cash flow. I look at the annual cash, then I take that and just multiply by 12. What's my annual cash flow there? If I can sell that property today and get more in profit than I would 10 years of that cash flow, for me, it's time to sell. And that's a tool I use, as a metric I use, so you can use that on your own, but on your own properties. For us, we know we need to get to 1,000 units, and the 8 units, the 7 units, the 12 units were a great place to start. We've maximized the income there. I've cashed out, refinanced just about all of those deals, right? So I've got my original capital out. Now there's still equity tied up in there. It's time to sell that asset, take that equity, 1031 exchange, not pay tax on it, put it into a bigger asset that I can start all over with. I get a whole new depreciation schedule, so I get a whole nother big tax write-off. I don't pay capital gains on that sale. And it's gonna be more easier and more profitable to manage because a 100-unit property, let's say I could sell all those, I think it's about 50 or 60 total units, go buy a 100-unit property, that has enough payroll to pay for an on-site manager and an on-site maintenance person. A 7 unit, an 8 unit, a 12 unit, we call those the mom and pop deals because those are typically the people who own those and they self-manage those. And that's what we did in the beginning. But now that we have a team, now that we have payroll, we have all that, we need more income to do that. And remember this and write this down. More income, more units equals more income equals more safety, right? And I'm kind of just like mentally, I'm a little over it. If 3 people move out of my 56 unit, I don't care. But if 3 people move out of my 7 unit, even though the whole portfolio is still cash flowing extremely well, I'm like, we've got 3 vacancies on a 7 unit. Like, this is not, that deal itself is not profitable. So it's just time to grow. Don't knock starting small. Don't knock the small deals because that's how I learned the lessons and got the cojones to go do the big deals. But when it's time to grow, don't be afraid to give up good for great. Those deals have been good, but they're not great. It's time to go get great and go on in that. So we will be selling that. If you want to maybe buy one of those, reach out to my wife. No, I'm not selling them off market. They're going to be on the market. I do own a real estate brokerage with my wife, so she'll be the one selling those, which is great because I don't end up paying commission, at least her commission on that. So look at your portfolio as pieces, like a chessboard. This isn't checkers. It's not just about one move. It's about 5 moves ahead. What can you do with that piece in your portfolio today to get to the end goal, right? Whatever your end goal may be. And sometimes it is more profitable to sell and then to move on and trade up. That's the power of real estate, okay? So last couple things here. Let me know if this is helpful. And selling's scary. I'm not going to negate that because you're like, well, what am I going to get? And what if the deal I go into next isn't as good as these deals? But that's where faith comes in, right? Fear is saying, what if? Faith is saying, even if. Even if, things don't go 100% the way I planned, I'm going to get to my goals. It's going to work out. I'm going to figure it out. As entrepreneurs, we just have to figure it out. So that's the way I look at it. I'm doubling down on Metro Detroit. A lot of you guys will ask me like, hey, would you invest here, here, here? Dude, I'm in Metro Detroit. I love Metro Detroit. It's the #1 in the country for rent growth right now, specifically Macomb County, where I own a lot of my assets in. I love it. It's staying strong. We're not being overbuilt. There's not oversupply. That's why I laugh when people comment on my thing, like, crash. I'm like, dude, you have no idea what you're talking about. We couldn't be further from a crash. There's no supply. There's no new supply coming on. Rent growth is staying strong. We're seeing reduced delinquency, reduced evictions, and the rent growth is staying steady at 4% per year, I think was the statistic I saw, which I'm freaking great with 4% per year, because you know how much your savings account is generating you? 0%. You know how much the bank is paying you? 0.001%. Right? So if I'm getting 4% rent growth, but I can force appreciation in so many other areas and I get massive tax write-offs, I am all for that. And I'm a big believer in invest where you live, invest in your backyard, invest where you know. I'm able to make moves on properties faster than other people because I know the area, I know the backyard. So stick with what you know. And a lot of people, like I said, I'm in California. We have a lot of my clients from California who are very successful, either W-2 people or entrepreneurs, and they invest in Michigan with us, Metro Detroit with us. When I say with us, I mean using my wife and her brokerage, because it's very affordable compared to out here. I can't imagine the price per unit here, 300, 400,000. Michigan, you can still get things 70,000 a door, 80,000 a door. And that $70,000 product is getting $1,400 a month in rent. It is freaking crazy. And you can still find deals that have $600 rents. $600 rents, that's crazy. That's so below market, right? So you can slowly work those up over time. It's a great area. I'm doubling down on it. I'm not looking at anywhere else. Will we maybe invest outside Michigan in the future? I'm never gonna say never. But for right now, I couldn't be happier with freaking Metro Detroit. I think everyone should be investing in Metro Detroit. Don't buy what I'm trying to buy, but buy anything else, right? It's just the fundamentals are so strong compared to the rest of the country, and we don't have natural disasters. I'm here in Newport Beach. There's freaking wildfires, man. There's wildfires out in LA, right? We don't have any of that. Yeah, we get snow, but snow never, I don't want to say killed anybody, right? Because I'm sure it did, but it's pretty kosher. It's pretty vanilla. It's just going to do this over time, which I like. I don't like volatility. Okay, so last couple points here. Utilizing the tax strategy more and more. Okay, Trump is in office. Whether you like him or love him or not, he is very pro real estate, which I'm pro real estate too. So bonus depreciation, I believe, is at 0% now. It has reset. I'm not a tax expert, so you can Google what that means, but it is very likely he was the person who did implement 100% bonus depreciation back in, I think it was 2020 or 2021, whatever. So word on the street is that's going to be coming back, but no matter what, the laws, the national laws and consensus is going to be very pro real estate, pro capitalism, pro economy, pro investing into America and American jobs and American enterprise. And I freaking love that because I'm a capitalist. I'm an entrepreneur. Everything I have, I built myself, and you're probably the same way. So I'm going to keep utilizing the tax strategy. Like I said, I'm going to sell my small deals, buy bigger deals, and cost segregate it, and get that bonus depreciation, get that regular depreciation, and use that to offset my ordinary income. That's what wealthy people do, guys. They don't quit their freaking job to buy a duplex and live off of that. They keep their job or they keep that business and they build income streams, they build their skill sets, and they make more money, and then they take the money and buy real estate to offset their taxable income so they keep more of their money. Remember, I think the motto of this video is revenue feeds the ego, profit feeds the family. So I'm gonna double down on that. I'm gonna keep taking advantage of the tax strategy because there's two tax laws, one for the informed, one for the uninformed, and they're both 100% legal, okay? That's what I'm focusing on in 2025. It's a year of growth. It's a year of retention. It's a year of focusing on our people and processes, hiring more people, doubling down on our processes, right? It's not all just about unit count. It's about profitability. It's about sustainability. I'm here to share my lessons to help you. So Let me know, was this helpful? And then, hey, if you've made it to this point in the video, leave a meaningful comment below. What are your goals in 2025? What are you focusing on? Where are you investing at? I want more community. I want more interaction here. I don't want 100,000 subscribers. I want just an intimate kind of open relationship with subscribers to where we can just talk about our goals freely and be a positive place and be a support place for each other. So I reply to all of my comments personally. I reply to all my emails personally. So drop a comment below. What are you focusing on in 2025? What are your goals? What point was the most helpful for you? Or if you have any questions, post those below. Until next time, thank you guys so much for being here. Get all the free resources in the description here. Got a free book, free masterclass. Reach out to me if you need anything. Comment below. Hey, if you need my help to help you grow your business and your real estate portfolio, click the link for the one-on-one coaching program in the description. Until next time, guys, we'll talk soon. Thanks.